So I think parts of it have hit us already. I mean, the fourth industrial revolution, really talks to having connected systems together. So at the moment, we're close on having 100 billion devices that are connected together. It talks to machine interaction, which is the Internet of Things. And one of the statistics we put up on our presentation is that an expectation next year is that there's going to be $370 billion of investment into the Internet of Things. So I think it's here. It's the application, and it's what else are we going to use with it? It'll probably take another 1, 2, or 3 years, but it's definitely here, and I think it's traveling at warp speed, and the pace of change is going to be exceptional. Thanks, Tim. I think what I really wanted to highlight is that the presentation spoke a lot about the World Economic Forum's Global Risk Report that Marsh is a partner of. And again, a lot of the conversation in the last few days was around IT and disruption and artificial intelligence. But in today's world, you really got to think about all the global risks and how they interconnect. So really the presentation was talking a little bit around some of the societal risks, the governmental risks, the environmental risks, and how all of those link together. What turmoil it's created in 2016. So we had a lot of political issues, obviously, such as the Brexit and Trump. We've had a lot of terrorist implications. There's been a lot of violence. There's been public politics. So the world is really changing, and how that interplay over the next 10 years is going to change globally, and then how the fourth industrial revolution really overlays it. So it was really picking up that conversation, and then ending off a little bit with about how can brokers and risk management professionals inside their own industries prepare themselves for the change that's coming, and what do they need to think about. For brokers, and really I think it comes down to three key things. I think it talks to data, it talks to distribution, and it talks to capital. And again, if you look at an organization like Marsh, obviously we're a global organization. We're in 140 countries, 400 offices, 25,000 people. So it's a big organization, and across that, you've got to think about the different components of your business as it relates to data, distribution, and capital. So I think if you're focusing on large corporate customers, where Marsh is particularly strong, it really then talks to understanding, adding value to clients, being a trusted risk advisor. And I guess there, clients become less concerned who the capital providers are. And we're seeing a lot of interest in terms of creating alternative capital, working with different capital providers. So clients will look to the broker to say, well, tell me how I can structure my insurance program, who should I place it with? But they're less concerned per se who the capital provider is. And I think that's been a shift in the last few years, which is different. And then when you talk to data and distribution, you're really talking to the mid-market, the individual consumer. How do we change the way we interact with consumers from a retail point of view? And that's really distribution, different forms of distribution, whether it's apps. I think the olden days of having offices all over the world and the country might potentially change. And then how do you use that data? Traditionally, my personal view has always been that intermediaries, let's say in the early 1900s, were in a unique position in that they knew more information about their clients than the insurers, and they knew more about the client than the insurer. Or did I say that? So they knew more about the insurance market than their clients. So they could bring that asymmetric information together and really add value to their customers. I think over time, as data has exploded globally, I think everyone can get access to that information. And it's really heightened the challenge for brokers to really understand their client's business, and drive for solutions and add value rather than just simply bringing two parties together. So I really think it's going to come down to probably the mid-market sectors and the retail sectors, where again I think consumers are going to look to have that instant gratification, talk to what's happening from technology, buying things on their phones, talking to their computers, having all the instant feedback coming through. And I guess as technology evolves, it'll get to the point where you can buy more and more complex solutions or complex information. But I think at this stage, being a trusted advisor in like a higher corporate space, I think it'll take some time for the disruption to get to that point in terms of purchasing. But at the moment, I think it's really going to be, from a retail perspective, something that's highly commoditized or relatively standard. I guess the technology there will reduce frictional costs, will reduce transaction costs. And if you're talking AI, it's a less of a complex system for the machine to learn. And obviously, as you move to the more complex stuff, that's what AI is good at. But I think it'll take some time before, let's say, the CEO of a global Fortune 500 company is going to be happy talking to, his Alexa or his little computer and saying, buy me catastrophe reinsurance, and he gets the answer that he's comfortable with. I think that'll take some time. I think it's an exceptionally difficult question. I mean, the statistics say that it's either by 2030 or by 2050, I can't remember, but that artificial intelligence will look to displace 50% of the global workforce. So, I mean, that's an astounding number. So I guess in that challenge, how do you integrate artificial intelligence into your business? How do you make it relevant, from a technical point of view, but then how do you link that with your existing force? How do you get those skills to work with each other? I mean, one of the things we picked up on my presentation was that traditionally technology has been a net creator of jobs. As people have used technology, they've become more productive. At the moment, the current pace of change in technology is so fast that the workforce and people can't reskill themselves quick enough. So at the moment now, technology is a detractor on the workforce, and it's actually having a negative impact on labor. And we see that going forward, and I guess it's going to come down to managing your workforce, understanding how you're going to use those systems, how you're going to use that information, how you keep the best people, and how you retain them and how you grow them, and getting that mix right between AI and autonomous workforce and a dedicated workforce with human beings that interact with customers. It's a very difficult question. I think it's going to have long challenges going forward, and I think that's going to be one of the key risks we see in terms of artificial intelligence. I think it's going to come to specific application. Again, artificial intelligence works well where there's massive amounts of data that the system can learn and understand quite quickly. Human beings have got that intelligence, they've got that processing power, but we can't operate at the level of an AI system. So again, you look at an example, so the NHS currently, I think they process 1 million patients every 36 hours. If you think that amount of information to analyze, look at the reports, analyze what's wrong with the patient, determine what to do next, and try to solve for that, it's a massive challenge. And again, that's where AI can particularly work well to take all those tests, take all those results, analyze them in an hour or two, as opposed to 2 or 3 days for what we've traditionally done. So I think you'll see pockets there where AI will come to play. And at the moment, there is a project that the NHS has implemented with a company called DeepMind, and they're doing exactly that. So I think you will see it in some aspects sooner rather than later. For the simple things, whether you want to have a relatively easy system for it to learn, it can pick it up. But I think fundamentally it will add value in that it can crunch numbers at a much greater speed than we humanly possible to do. I don't know. I mean, you talk to different people. Some of the big global celebrities like Elon Musk thinks AI is it's the cataclysm. When the singularity comes, the world's going to fall apart. We're going to have a Terminator issue. So again, I'm not sure how it will play out. I think we see a lot of application. I think at the end of the day, customers have to get value from anyone they're dealing with. At the moment, our challenge as brokers is to make sure we know more information, we know more about our customers, know more about the industry, so we can add that value better than them just quickly doing a Google search or asking a few people on a social platform. That's how you've got to add value. I guess if you get to the point where a level of trust is built with an artificial intelligence system and the client gets that value, you might see the shift. But I'm not sure when we're going to get to that point, and that'll be an interesting challenge. So again, I think we need to be specific in what we do as an industry. I think there's lots of disruptive technology coming. We need to think carefully how we apply it. I don't think there's one solution that's gonna fit everything. And you see it with a lot of the companies in the industry focusing on different strategies for different streams of their business. I think it's exciting times. I think we can really harness the information, harness the technology. But I think ultimately, and it's my view is that fundamentally at the end of the day, customer satisfaction and adding value is key. No matter what technology, no matter how technology really evolves the risk landscape.